The all-important Fed meeting gets underway today. Let's bring in Michele Schneider, Director of Trading at MarketGauge for the Trader Rundown. And Mish, we also have more earnings coming in and a jobs report at the end of the week. What do you think?
It's really hard to know what to think. If we look at we have to look at the market in several ways. Number one is it's in a bearish phase. Clearly, everything has broken down, except we're still miraculously holding some of the lower levels in some of the instruments that we saw in February. When you look at the high yield bonds, particularly the junk bonds, they look like they could be getting some kind of a blow off bottom. The dollar is crazy strong. And then on top of that, we have the yields really continuing to go up in anticipation that the Fed can go anywhere from 50 basis points to 75 basis points when they meet. So there's a lot of stuff going on right now. The stagflation narrative obviously is huge, but commodities have come off a little bit as well, which is typical in commodities. They're extremely volatile. So I would say that the next couple of days will be key. The unemployment report, I wouldn't worry about as much. I think most of the eyes are on Fed policy. We've seen, obviously, some issues with the labor market, but yet at the same time, we still have a very strong labor market. So what we're looking at right now is if particularly these junk bonds, find some kind of flooring. I wouldn't say the market is necessarily bottom, but I would be prepared for the potential in a very oversold condition for another decent bounce, and then we can see what happens from there. If the junk bonds are just taking a little bit of rest and go sideways to work off those oversold conditions and go back down, then we'll see another leg. And I wish I could be more definite than that, but it's really hard to tell at this point what's going to happen. Other than I can tell you over a long term, I think what we mean in the stagflation environment is that the market doesn't necessarily have to have violent moves up or down. It could literally find a range and stagnate within that range for a long period of time.
With all this going on, what's your trade of the day?
Actually, I think the trade of the day right now is to not trade and give this market a little bit of time to tell us what to do next. Do I have things on the radar? Always. There are certain instruments that look better because even in this correction, they're holding above their moving averages. IBM, for example, might be one. But what we do know is that we're going to start another leg lower. Really, basically, in a liquidity crisis, everything goes down. So I would say we talked about volatility. We've talked about the metals. They're finding a footing. And now in terms of equities, maybe Facebook, maybe IBM. But I'm really thinking right now, I hate to use the old adage, but cash is not a bad position to be, at least for the next few days.
Sometimes it's good to sit on your hands for a while. Thank you, Michele.
Thank you so much.
Go to businessfirstam.com for where to see our show on TV.